Well, welcome back to Krown's Crypto Cave. It is a very special Sunday today because Sunday we are bringing back the most extensive possible that I can find for the long-term analysis playlist. Now, with that said, this is not going to be having any focus on actually short-term timeframes. Spoiler surprise, it is more or less the same thing as what we spoke about from yesterday. In fact, we did hit our short-term target from yesterday at the top side of the range, and what's probably most likely to happen, well, range a little bit more until CME open a little bit later today. Anyways, with that said, all of the information today, again, is going to be for high-term time frame, very long-term analysis. And what I am going to do my best to do, what I'm going to attempt to do, is I'm going to attempt to put together the best bullish case, meaning that the highs are not in and Bitcoin can go off to those crazy astronomical prices that I think a lot of people are very excited for. And on the other side, we're going to create the biggest bearish case as well. So with that said, I just want to preface this whole conversation because it's going to be a long video, very likely. And without further ado, let's get into it right now. So no focus on the Krown chain application today, although I do want to give you a sneak peek into what we actually will be getting relatively soon. Haha, some quant data over here. Anyways, we're going to start it off over here. And if you're familiar with this channel for the last couple of years, we're going to start off with the matrix chart for the first time in a very long time. And we're going to start off with the bullish case as well. So that way that people cannot be as angry with me for what's later to come. Anyways. Okay, cool. So what we're going to do right now is we are going to go over the biggest bullish case here. We're going to go over all of the major things on the long-term timeframes that I think suggest that Bitcoin is essentially not done to the upside. Anyways, what do we first have over here? Well, firstly, let's put on our lovely moving averages, of which I'm going to get rid of all of them here. And we're just going to put on one moving average to rule them all. It's going to be the yellow, and it's going to be the 9 exponential moving average. Whoops. Not the 219, but the 9 right here. There we go. Okay, lovely. And let's throw this baby on. All right, so this is on, whoops, not on a weekly. Let's do this on a monthly, obviously. And the monthly says what? Well, anytime that we have seen essentially Bitcoin rally on the monthly, it maintains above the 9 exponential average right here. And you can see that all of these bull markets and bear markets were essentially started and ended by getting above or below that on a closing basis. As you can see, going back on over here, rides it the whole way up. And this is on BLX, by the way. So this is going to have data all the way to the Genesis at 2010. Once we break right here, boom, massive downside. You know, one of those from top to bottom, a 93% drop, nothing too crazy to be spoken about, regains it over here, and glory times once again until the inevitable happens in 2014. And what happens after that? You get another one of these dastardly 85-86% drops, not unbeknownst to Bitcoin, of course. And then we regain it over here and resume the fun times once again, lose it obviously a little bit later, and that is when you play out your next 84% downside move. Anyways, and same thing over here actually too. In fact, let's see, just from there to there. Yeah, about 73. Oh, that wasn't too bad now, was it? Anyways, as it is right now, Bitcoin is basing off this level. So as long as Bitcoin is, well, essentially closing above, technically speaking, we have not seen any of those major massive bear markets emerge from that precipice. What does that essentially imply? Well, we're literally at it right fucking now, by the way, and that is currently coming in. And let me just double check on Bitstamp right here. Yep, it is synonymous with it, even though BLX is not updated in real time. 36,486. So we're pretty much right around there. And in fact, actually referencing some of the put call data that we've been looking at over the past few weeks. Let me just make sure I'm recording. Okay, I'm recording, so this is good. Get rid of this notification over here. Great. I do recall that at the end of this month, we actually do see a bit of a pin right around 36,000 bucks. So that actually is somewhat of a decent sign, I do suppose, at least for now. Anyways, moving on. What do we have next? Okay. So next, I want to bring you over to the weekly volatility over here. And what do we see? We do see that historically speaking, and to be fair, we really don't have too many iterations with this, but for the iterations that we do have, Bitcoin has never put in a macro top ever without printing red on the weekly HVP, actually. You could probably do this on BBWP, but for whatever reason, I have this one still loaded up on this chart. I'm going to imagine that they're very, very similar in this case, but you can reference this top right here, obviously this top right here, although the beginning doesn't really count as much. There's just not enough data. We got this top right here, obviously more recently in 2017, and have we hit that red zone in the current highs of about 64,000 bucks? No, actually. In fact, we're still expanding, if anything. Okay, rather interesting. Anyways, get rid of that one, and let's get rid of that right here as well. Now let's talk about, what do we want to talk about next? Let's talk about the Bitcoin investor tool. How about that? This indicator, while not necessarily my favorite, is rather interesting, I suppose. Let me just put it on. I think it needs to be on a daily right here. Let's just go down to that. Yep, there we go. And historically speaking, anytime the Bitcoin has gone on these mega rallies, at least for the history that we do have, it has essentially topped out above the red band right here. See this iteration over here in 2013, this iteration over here in 2014, this iteration over here in 2017, and thus far, while we have tested this region, we've actually not closed any successive dildos above that this whole run actually in the last year or so. So another interesting one as well. Another one that I want to bring you over to is the Bitcoin log curve zone, which is, and let's go to the weekly for this one, which is actually more or less on the neutral side, I would suppose, but it still kind of keeps the Bullish hopes alive for now. And what does that essentially imply? Well, what do we have right here? We do see something somewhat similar, and it doesn't necessarily need to be similar, but the implications are definitely similar to the 2013 double bubble over here. Now, what happened during this time? You can see that Bitcoin essentially based within the yellow zone for about almost a full year, actually. Let's see, let's just measure this one out. Yeah, it starts in March, ends in November. Actually, some more like a half year, in fact. A little bit less than that, but my monthly maths are off as always. But you can see right now, Bitcoin is obviously based in the yellow zone as well. And realistically, we've not really seen like these mega tops come in at anywhere below the red zone, as you can see over here in 2017, as you can see over here in 2014, and over here in 2011 as well. So for reference, that would be somewhere right around about $1.14, $1.15, so 115,000 bucks. So I do suppose that, if the bull run does continue, 6 digits is still, I suppose, possible, yes. But I do definitely push back on the narrative that Bitcoin's going to $250,000 this year, for example, or maybe even next year. But 6 digits does seem a little bit reasonable. In fact, we can come up with another thing that would even suggest that as well. What we'll do right now is I'll bring you into the matrix, which like I said, we haven't done in a very long time. All right, this is going to be a headache to explain, I suppose, but but let's just get through it. How about that? Okay, cool. So each and every one of these dotted trend lines represents a support trend line for a parabolic market cycle. Each and every one in Bitcoin's history, starting off all the way back to 2010. And all the parabolic market cycles that I essentially define within this are weekly trends, essentially, as that has been that has accurately gotten all of the macro cycles actually in Bitcoin's history. So we started off over here in 2010 and 2011, and what do you know? So that is your support during those times. Actually, we even have one a little bit before that, about 2010 and 2010 right here. So very, very close together. And that is your first support trend line for that weekly cycle. It gets the actual highs for the next subsequent cycle highs in 2011 and a little bit later in 2011 right here as well. So I'm referencing this one right here. Boom, boom, breaks, or sorry, not breaks, but tests right here, become your highs, and then top out and down. Then we create another support trend line for the next parabolic market cycle. And where is that anchored in? That would be anchored in your 2011 and almost 12 right here. Yep, 2012 right there. And that becomes the highs of your next parabolic market cycle in 2013 and 2014 right here. Then we come up with another support trend line for the next parabolic market cycle coming in from right here and right here. That'd be 2012 and almost 2014, and that becomes the next parabolic cycle highs for the 2017-2018 cycle right here. And then we come up with another support trend line for the next parabolic market cycle, and that's actually going to be in this blue line right here. I made it very, very visible, and that's coming in from here, anchored in 2014 and 2015, or sorry, 2015 and 2016. And thus far, that has actually become our highs of our current cycle, as you do see it getting the highs in June 2019 before the $14,000 and ultimately down to $4,000 drop. And then also pretty much right around a current high structure right now, in fact. And guess what? If we were to further support that potential, 6-digit run, we could see that would be a potential region coming into, about end of this year, in fact, if Bitcoin really did want to continue on with the long-term macro rally. Now, this stuff right here, I do want to be on record as saying I don't trust it as much. These are very, very variable, to be used about alliteration, but more importantly with that, it's very difficult to kind of fit these and get like accurate prices over a long period of time. I have done it right here, but as you can see, even just like the slightest pixel move obviously accounts for like a decent amount of dollar change. So I would just say that it's in the vicinity over there is what I'm essentially trying to say. Anyways, you also notice that I have a bunch of fibs on these as well. So let's talk about this for a second. Okay, all right. So what I've done here is I've taken a fib. I've essentially done a fib extension in a backwards way. Which essentially goes from the prior weekly consolidation. And as you can see, or as we'll show right here, all iterations going back to 2010 have then thus gotten the next weekly low, the next essentially cycle low in the way that I kind of define it myself, at the 4-spot 764 extension. Let me just dial this one in really quickly. Yes, it is let me just double check. I'm pretty sure it is. Yes, it's the 4-spot 764 extension right there. Anyway, so I started off with this area right here, taking this and this, okay, just the consolidation right there, leading into the breakout. That is essentially the top point of it, the top anchor of it. And then the 4-spot 764 becomes the next weekly low for the next essential move. And you can see that right there. Boom, getting this area right here. We do the same thing right here. Take it from high, take it from low, and that gets the 4-spot 764 right around this major low right here. And then I do the same thing for this one, going from there to there. Boom, plots the 764 right around the next major low. We're going all the way back to 2011 right now. We're still in 2011, just for reference. Then we take the next one for this cycle right here. Again, anchored top right there, bottom right there. Boom, 4-spot 764 is coming in where? Right around the next major low. This is actually the double bubble low for the first bubble in 2013, in fact. Now, I do want to say this. When I do pull an extension for this area right here, it does not get the next one accurately. In fact, if anything, let me just pull it back on over here. I'll show you exactly what it does get. It does get actually around the... it doesn't really give us anything of particular interest here. I would say like around the sort of major breakdown area for the next double bubble, but that would be the one iteration where this is not true. But anyways, we can do the same thing actually for our current one, in fact, or not our current one, but the one prior. And that would be this right here, going from 2014 to 2015, essentially. And what does that get? That gets our $3,100 low, or around our $3,100 low in 2018, 2019 right here, and kind of test it again in 2020, I suppose, as well. Anyways, we can do the same sort of extension for our current cycle going on right here. And as you can see, the 4-spot 764 is actually above our current highs right now. In fact, it's even in line with that like long-term trend line here too, which is extra interesting to me as well. What does that essentially imply? Don't know. At least if you are going to look at this from a bullish perspective, it would imply that we probably are not done with the upside rally, because we haven't really seen, price action base or top out below this extension right here. Actually ever, in fact, it looks like. So I do think that's rather compelling as well. Anyway, so let me just pull up my notes. This is like the one time where I actually take a little bit of notes. The next one that I want to pull up is right here as well. So anytime that we have seen these weekly breakouts after a bit of a consolidation, we do see somewhat of a, general percentage move from there. So I'll take you through this one right now. We can start off with this one right here from 2010. Boom, breakout from that prior consolidation to next high, about 230%. Pretty impressive stuff. If we were to take it on a wick basis, it'd be even more. Obviously, that would be about 400%. But I do think that, especially in the beginning of Bitcoin land, probably best to use closures, just can be a little bit more better. There we go. Good English right now. Anyway, same thing over here. Breakout to next high, about 225%. Not bad. Same thing on this one right here. Breakout to next major high on a closing basis, 1560%. Not bad as well. Again, we are still in 2012 now, by the way. Breakout on weekly to next major high is what? 700, 800, more like 850%. Jesus Christ, man, it really does change a lot. I mean, this is log scale after all. Anyways, this weekly breakout to next major high is what? 500%. Very interesting. Once again, we do see this breakout on this weekly to next major high from 2017 to 2018. Is about 2,000%, so definitely the biggest outlier, or sorry, was it the biggest outlier? Is this one the biggest outlier? Yeah, that one is the biggest outlier actually on a closing basis. And then thus far, from our current weekly breakout of our prior all-time high to where we're currently at right now, is about 200 and some odd change. So it is within the context of some of the lower outliers that we have seen in the past of Bitcoin history, but it is definitely nowhere near around the mean or median. In fact, if I were to guess, the mean's probably somewhere around like 500%, give or take. maybe more like 400%. But ultimately, this would, you know, be definitely on the lower side, which is questionable. And I would say kind of aligns a little bit more with the boo laws there. Yeah, I mean, again, you know, make the decision for yourself. And that's why I'm kind of presenting both sides as best as I can here. And, you know, as a trader, I realistically don't really care which way that it goes. As a Bitcoin, you know, kind of appreciator, yeah, I'd rather it go up. It also, I mean, it's just generally easier to trade when it just goes up too. It's not as fun, but it's definitely easier. I'm not above admitting that, but let's just play with numbers here. What if Bitcoin, you know, were to rally 400%, or 500%? Oh, that's rather interesting now, isn't it? That's that $110,000 number that we kind of came up with earlier now, isn't it? Right around here. Strange, very strange now, isn't it? Anyways, I just thought that was somewhat interesting right there. Anyways, okay, cool. Do I have anything else? Yes, I do. I have a couple more, in fact. All right, so what's the next one that we have? The good old Bitcoin stock to flow model. Now, stock to flow, look, I can't talk about underlying fundamentals. There are most people probably understand it significantly better than me. But what I do understand is colors, and colors make this rather easy. And while this beginning sort of stature over here is not all that helpful, we can see a little bit more of an obvious interplay, especially going on from the 2013 double bubble to present times, where we do see the colors actually have a somewhat good interplay with the phases of the market cycle. For example, when it's orange, yellow, green, rally to the moon and beyond. When it's cyan, blue, purple, it is death time for hodlers, essentially. Anyways, you can see that once it gets into the green zone, that is like your blow off, absolutely face melting rally portion, except for back here. I mean, this one was kind of the opposite, in fact, of the market cycle. So you can see this area right here. I mean, that is essentially your breakout, and we're talking about, you know, yet again another 400% move, not bad. We see this one over here, Prince Green at about 5,000 bucks. That is the next high. That was 300%. Sorry, let me just double check on this one right here. That was 300. This one is 400, so somewhat similar. And then guess what? Just as of last week, we started printing green on this. And technically speaking, in the last few iterations for this, am I playing a video back there? I am playing a video back there, but thank God it's not actually coming through these speakers. Okay. That would have been really fucking annoying to hear my voice going on twice there. Anyways, we did just start printing green right over here as well. Now let's see what would that imply if we were to, you know, just add, let's call it like the 300% on to price action, or even 200%. Maybe it's like 400, then 300, then 200. No, that's bullshit probably. But just out of interest, 200% or 200 and some odd change would put us in that $110,000, $115,000 level. Just saying. Anyways, let's see. 300% would put us where? 150,000 bucks. 400% would put us where? Still below 200,000 bucks. About 100. It's like still just below 200,000 bucks, man. This is bullshit. It's a fucking scam. No, man. That is still absolutely ridiculous, and I would not feel comfortable in any way, shape, or form saying to you that is guaranteed to fucking happen. I really am curious, like, what is going to happen to some of the YouTubers who, or just any of the people who have been like loudly saying that Bitcoin will get to those numbers, like no questions about it. Like, that's what really gets me about that fucking Michael Saylor thing. Like, I'm probably even more on the side of Michael Saylor than most people. But when he goes out there and he says like, hey, leverage your house or you know, take a mortgage out on your house and like just sell everything to buy Bitcoin. It's like, okay, you might be right. And there's definitely a non-zero probability that you could be right. And it's probably even, you know, maybe even decent in some people's eyes. I won't comment on that. But if you even have a 1% or like 0.1% probability of being wrong, and you're telling people to do that like directly in a financial advice way, I don't know, man. It's like, okay, there maybe talk about some risks as well. You know, perhaps he knows some that I don't. In fact, he probably does. But realistically, that's why I don't think I could ever say something like that. You know, there is just like there's a non-zero probability of that happening, there's certainly a non-zero probability of that also not happening. Okay, cool. All right, so did I get through everything right here that I want to speak about? I think so. So that is the biggest boolah-ish case that I can find with this information in mind. Okay, turn your fucking eyes and ears away, Bulas, because it's bear run time. And this is actually my favorite time. If we do actually enter into a full-on bearish market, that is, you know, that is where you actually really have to trade. And while it's a little more stressful and a little bit more active, it's also a lot more fun too. And you get to play the video game of trading. Anyways, okay, all right. So let's start it off very, very simply here. Just really fucking simple stuff, right? Okay, so anytime that we have seen a bull market, Bitcoin, you know, you probably know this one, Bitcoin has only pulled back essentially to like the 35, you know, about 30 to 40%, you know, on those reads. In fact, if we just put on a 21 exponential average right here, oh, you bastard, you did it again. Do this, boom. It essentially pulls down to the yellow 21 exponential average on the weekly. In fact, you can see going all the way back to 2011 Genesis over here. In bull markets, we like to base off the yellow 21 exponential average on the weekly, and in bear markets, we like to sell off on the 21 exponential average on the weekly. Pretty much performs very, very similarly the whole way through. The slope of it does matter as well. And for right now, what do we have? We are both below it, and it does have a negative slope, similar to all these bear markets in the past. In fact, right here, which, by the way, did lead even into a bit of a bull trap before the inevitable did happen. Same thing over here, by the way, as well in 2019. Same thing over here in 2014. All of these first moves were bull traps, and then down, down, down. This one over here, just a small stint, but you'll notice that the yellow 21 exponential average never got a negative slope, which is very important. And this one over here, same thing as well, bull trap and down on a very fast scale. So for right now, that is not only are we fulfilling both of those prophecies right there, but we're also even selling off of it right now as well. If you kind of look at this as being dragged into price action, which on this next closure, it very likely will be, in fact. Anyways, moving on. The next one that I want to address is the weekly RSI, which we haven't spoken about in a long time here, but I'm going to go to, I think I still have it on this chart. All right, so if we go back to the beginning, or is this, no, it's, well, fair enough. Yeah, this is good enough. Okay, so you can see between these two rays right here, these two horizontal rays right here, we do see that this is, or we look at this essentially as like a neutral zone on RSI, and just, you know, in general parlance, I mean, that is quite literally neutral for the RSI, meaning that above it is generally bullish, below it is generally bearish, in between it is neutral, can go either way. And if you start to base in there and, you know, go up, obviously bullish. If you start to base in there and then go down, obviously bearish. We can go back to the specific example over here on the bottom side, and you can see that anytime we really have come down and actually broken it, that has been the beginning of the end. In fact, you can see this one over here, realistically in 2014, telling you that the run is over here. And in fact, and what's very interesting about this one is that it tells you on the double bubble in 2013 to stay in on that first mega drop right here. That's the one to about 48 read actually on this. And then it's not until we actually break it a little bit later, almost a year later in February, March of 2014, where bull trap and then down to the depths of hell we go. And you can see that essentially just bases there for the rest of the time. And then in 2015, 2016, regains it right here, bases, and then boom, bases off the top side of it at about 55. That is your bull market, of course. And then what happens in 2018, January, boom, we break it right here. Bull trap, obviously in February, March, so you can see right here. And then down, down, down we go. Same thing, I believe, more recently in 2019, September right here. Remember that run from 4,000 to 14,000, then bull trap, and down we go for a lovely, very dastardly 70% or 60% downside move. And then what do? We regain it in late 2020, and then that's, run from like 10,000 to 60,000 bucks, rather impressive. What's happened thus far that's different? Well, we actually have closed below this region, and right now, or actually not right now, but as of this week, we have 1, retested it, 2, rejected it. So we're comfortable living below there, in fact. And that's what I'm looking at right here. A little bit concerning, to say the least. Anyways, going back to this chart over here, we can also throw on the good old pi cycle, which in hindsight was pretty fucking good, man. Pretty fucking good. Definitely deserves respect. I did not give it the respect at first pass, and I paid the golden price for it. Well, I didn't necessarily pay the price for it, but it would have told me to get bearish about 2 weeks before I did. Remember, we were looking at the daily trend over here, and when it started to take out that $45,000 low, well, that was the problem, and the next rally was history thus far. Anyways, all these pi cycle tops have led to a very specific conclusion, actually. We can go back to the last one in 2018. We get the pi cycle top right here. From top to bottom on the first drive, about 70% downside move. And ultimately, 83.5% downside move. Rather, aggressive to say the very least. Same thing over here in 2013, 2014, right? We get the pi cycle top right here, initially down about almost 70%, 67.5%, and then ultimately down about 84%. And then we get the same thing over here now, don't we? We get this high, boom. Let's actually take this area right here from a wick to wick. In this case, that would be about 73, or sorry, it'd actually be a little bit more because the wick is all the way over here. Wick to wick, it would be about 75, 76% to the downside. And thus far, we actually have gotten that signal, obviously. But how far have we gone down to date? Well, from signal given to current price action, or even the low of the current price action, just around 50%, actually. So all things considered, historically speaking, this would be very much an outlier by a major drive. Okay. All right. So we spoke about the weekly. We spoke about weekly there and there. We briefly mentioned the percentage drops. Obviously, this can be done multiple ways, but basically, when we were going over the weekly 21 over here on this chart, all of these drops down to the 21 typically play out about 30 to 40%. Just briefly going over right here, about 26 right there, boom, right there, about 34.5%. So the general notion was in a bull market, Bitcoin typically does not pull back below about 40%. On these really aggressive downside moves, even within the context of a bull market. And as you can see, that is more or less true, I suppose, throughout the history of Bitcoin. Which is, realistically not all that much for these like mega rallies. We only have like a couple of them to go off of. But in this case right here, Bitcoin's obviously pulled back more than 40%, from top to bottom, as we just saw. Actually, it's more like 54.25. Still a little bit of an outlier situation. But I'm curious, if we were to play around with those numbers and go off the pi cycle, which on the lower end was about 70 to 75% drop down, and on the higher end was about 85% drop down, let's see what we get just from top to bottom. 60% puts us at $26,000. So even that's a little bit on the outlier side, of course. 70% puts us at $19,000. That's kind of where I would be thinking if Bitcoin does really break to the downside. And then if we were to take out like 85%, that would put Bitcoin down around, that'd put Bitcoin at like $11,500. That's kind of a little bit much in my opinion, but hey, that would be on the more aggressive side, obviously. Anyways, let's go over to the 5-day now too. What do we have here? We do have an interplay, a very obvious interplay actually, between the red 10 simple, the yellow 21 exponential average, and the cyan 89 exponential average. And by the way, we actually we just closed that 5-day last night, and that looks like absolute shit. Oh man, this thing's coming back down to 31. Probably within this next week. Do I think that we rally up to 37 first though? Probably. Maybe around there. Whatever. But yeah, this one really looks like it wants to come down actually. Nasty. Anyways, okay, cool. So what was I just about to say? Yes, the 10 simple, the yellow 21, and the cyan 89. Okay, so look at the interplay right here. Look at the interplay. Memorize the interplay. See the red 10 simple crossing the downside, the yellow 21 exponential average, basing off the 89 exponential average first to begin with. So base here, cross here, rallies into the cross, and then what happens throughout the history of Bitcoin? Well, do we have an example right here? Not really, because Bitcoin's not basing off the 89 in this case. We do get the cross. And to be fair, Bitcoin does rally into it, but takes it out. And, fair enough. This would be an example kind of where that is not true, but also not necessarily the full picture, of course. This one's a lot more similar right here, where we do see Bitcoin basing off the 89 after a 3-month-long consolidation on the highs, rallies up into the cross between the 10 simple and the 21. That cross is rejected, even though it gets above it for a bit too. But the negative slopes on them is what is what the big tell is. And down we go. Basing later off on the 377 is actually where we eventually end up. Actually, hold on. I didn't even realize this before, but hold on. Keep that in mind. Yes, so we actually eventually do base down around the 377. Same thing over here, in fact. Bases off the 89 exponential average first, bounces up into the cross between the 10 simple and the 21. Negative slopes the whole way through. Where do we eventually find our lows, or around our lows? The 377, almost a year later. Very interesting. Unfortunately, we don't have the 377 after that, but you can kind of visualize it going back here. And it's basically it's basically gonna give you the same rate as like a 200 simple, and I happen to know that the 200 simple definitely does come in around this region as well on the weekly, that is. Anyways, same thing over here. Base off the 89, bounces up into the cross. And we get negative slopes on the cross as they get a downside momentum, and boom, bull trap all the way down. So we are dealing with something relatively similar to that right now as well. And for reference, now I'm not saying this is going to happen or this is destined to happen, but it is rather interesting that it has happened 2 to 3 times in the past. We do see the 377 is actually coming in right around about $14,000. And thus far, we have bounced off the 89. We did not get above this cross right here, however, which would be one good counterpoint to what I'm saying. Or it's not necessarily a counterpoint, but it's just like maybe it's even weaker than what I first considered. Anyways, with that in mind, well, that actually has been the historical relevancy of that. Okay, all right, so let's talk about the next one now. We have the biweekly MACD, which we've spoken about ad fucking nauseum over here, but it does kind of deserve its merits essentially. All right, cool. So what's going on right here? Well, we do see, let's go to this chart actually right here. We do see biweekly MACD crossing to the downside. This really only happened a few times in Bitcoin's history, actually. In fact, let's go to BLX index to see if we can find even more iterations, which not really. Yeah, unfortunately, not really. Oh, well, anyways, regardless of that, we do see that it is currently crossing to the downside. I want you to look at price action right here, where Bitcoin is basing off the white 20 simple moving average on the biweekly and bouncing into the, I guess it's more like a bluish 9 exponential moving average is what I believe I have there. Anyways, we do see the last time that we actually had this cross was right here. Bitcoin based off the white 20 simple, bounces above the 9, rejects, down we go. Actually, let's put on the 55 in this case, based off the 55 a little bit later, and then eventually even just crashes even below the bottom side trend band on the biweekly a little bit. Same thing over here. We get the biweekly MACD cross to the downside. Bitcoin based off the 20 simple, bounces up into the 9 exponential average, bull trap and down. First off the 55, base, break, and into the bottom trend band. Same thing over here. We do see this one crossing the downside now, don't we? Bitcoin based off the 20 simple, bounces up above the 9, then rejection, and down we go to the 55, and eventually even lower than that. Do we have another example? Maybe? Yeah, no, we don't, unfortunately. What could we also be looking at? We could also be looking at, I'm actually looking at the SMI right here, which is kind of suggesting something. We can go over very, very briefly. It is an index stochastic essentially, so it should be relevant to the history here. Anyways, we do see, anytime this has crossed to the downside below the 0 read specifically, that has been, well, just let the data kind of speak for itself. It's not a great timer of a move, to be fair. I mean, technically speaking, it does kind of time this bull trap right here, and while Bitcoin does even trade back around those levels a little bit later, eventually the coronavirus dump does happen, and we do see that mega massive move down right there. This one turns right on over here, basically at the precipice of the 2018 high. I think that one kind of speaks for itself. This one over here would be a one-off and not a good one, so that would be a good counterpoint to what I just said. And I'd have actually not tested this one yet. I just kind of noticed it while we were looking at it here. And then this one right here, we do see same thing, cross the downside and just down the whole way through. Same thing over here, gets the top, cross the downside all the way through. And this one's a little bit too early in Bitcoin's history to really matter. So we have that as well. Anyways, all right, so we got that. Okay, let's talk about another one right here. Daily. So this is on daily time frame. We're going to take everything off but the 377. A couple of people pointed this out to me. I want to give credit to them because I actually didn't notice this myself. I think Shub in the Discord actually pointed this one out to me, and maybe a couple other people as well. So credit to you guys. But what do we see right here? This is the blue 377 exponential average, a very long-term moving average, essentially like the yearly moving average. In a case, in the case for an exponential, it's kind of also a major fib as well. Anyways, you can see that we have essentially wicked below the blue 377 exponential average for the first time in this whole run, basically since coronavirus dump time. What does that imply? Well, historically speaking, anytime that we've even tested below, that has been the end of the fun times. And while you do see over here, this one does get a nice, little bull trap after it. That was sold into, and down we go. I mean, down we go to the tune of like big time, 44% from that signal given. Same thing over here. Just a small wick below. Yeah, we get plenty of bounces off this region, but all failures over the next year, and about 50% down from that signal, that signal to next major low. Then we have this iteration over here, obviously in 2014. Same thing, Bitcoin based off right there, boom, from there to next low, or actually let's go from price action to next low. That's going to be about 50-55% as well, actually rather similar. And then we actually don't have any other iterations other than that, but just this one's a little bit less solid, I'd say. It's certainly on less solid footing, but I do think that it is relevant to speak about just very briefly there. Anyways, we can also talk about this as well. We got the monthly Stokes. Monthly Stokes crossing the downside and getting outside of the bullish control zone for the outside of the bullish critical zone for the first time since this run really got going, by the way, all the way back in November 2020. So it's been there for a while. And well, anytime we have done that, guess what? Guess the last time. That was January 2018. Go to BLX index. Do we have more history? Yeah, we have January 2018 where this was true, and then right here in May 2013. Guess where May 2013 is? Right there. And guess where the last one is? Right there. Obviously, you already know this. Anyways, okay. So did I just nail everything right there? Did we get everything that needed to be gotten? I think so. Yes, I do feel like I'm forgetting one thing, but here's kind of where I'd like to leave it. Here's where I'd kind of like to leave it. Okay, so I've spoken about a lot of doom and a lot of gloom and a lot of hopium as well. I basically pumped in as much hopium as I could possibly do. And to be fair, I mean, there certainly are a lot more things pointing towards more downside, if I had to be honest. Or if I had to be honest, like I have to be fucking honest right now. I'm sorry. No, if I'm being like very straightforward, do I think that we could still get a bounce up into the mid $40,000 territory? Yeah, very easily. But as long as Bitcoin is below $50,000, I do reserve major reservations for this price action long term. Now, with that said, I do want to come up with essentially what I'd be looking for in order to get bullish, I suppose. Essentially declaring that the macro low is in. Well, the biggest things for me would be looking for the hash ribbon signal over here. It's a free indicator, by the way. I want to see this print a blue buy signal. Until we get something like that, there is no talk at all whatsoever from a macro standpoint of a macro low being in place. Just period. If that is not present, it's not fucking there. That is what we've seen every time within the history of Bitcoin. Not always a macro low, but it does come on every macro low and also major lows as well. So it wouldn't necessarily imply that we do have a macro low in place, but it would be a pretty damn good first step, I'd say. And if you want to backtest yourself, I strongly suggest that you do. But basically what we do find is that once you get the blue buy signal, the last major daily low prior to that, while sometimes it gets retested around there, does remain the last daily major low. And in fact, the only iteration where this is not true is in coronavirus dump time right here, where you get the blue buy signal and your prior low was $6,600. And obviously Bitcoin does go below that, but that is one iteration out of 11. And you could say that this was a bit of an outlier, maybe even a black swan situation. I know some people would argue against that, but just for simplicity's sake, we could say, it was a bit of an outlier situation, to be fair. Anyways, any other time that we've seen that, though, any other time, it has essentially confirmed that the last major low and typically macro lows in, similar to this one over here. And again, it's not a great timer of a buy. I mean, you see the blue buy signal going on right here. This is the prior major daily low. That would be $3,200. Bitcoin even comes down all the way to like $3,300 or $3,400, somewhere around there. But it does not violate that prior low. That's the most important part. You'll also notice that throughout this whole portion right here, we didn't have a blue buy signal the whole way through. So that is rather important as well. Same thing over here, multiple times. Now this one does test multiple times into this region, but these still do actually hold true, which is actually really, really impressive to me. Started off mostly with this one right here, confirms this one as the last major macro low, 195. And yeah, we never do violate that one once again. Same thing over here, same thing over here, same thing over here. So I'd want to see something like that. And then I'd also simultaneously want to see, I'd want to see the daily and an uptrend. If we can get those two things together alongside a very, 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 very low read. And when I say an extremely low read on the BBWP, I mean somewhere down in the single digits. And then I would be comfortable saying, okay, we might actually have a macro low in. And if this is a macro low, then all is well and good. Now this can take a long time, and I imagine it will take a long time. And now that I look at it over here on the daily TSI, what do we have? We do have a trend line coming in from our last few highs, going all the way back to January. That's this high, this high, this high, this high, this high, and this high right here too. All right, anyways, just as an aside, I don't want to focus on that right now. Okay, so if Bitcoin was to, let's say, put in a major base where we're currently at, what would that likely look like? Well, we've spoken about this at length. Obviously, this is going to be within the context of those signals that we just spoke about. Realistically, if Bitcoin is going to put in a macro low here, which I do think is possible, what we'd expect to see is we'd expect to see some long form sideways action around this level. Maybe even Bitcoin does make a slightly lower low. It's possible down around 30,000 bucks again. Certainly possible, but that would essentially be what it looks like in my experience. You want to see about the same time spent on your highs as on your lows in these sort of Wyckoff distribution and then subsequent accumulation phases on the other side. So this one over here took about 3 months. This one over here has only been, in motion for about a month. So, this could come with another few tests down to low $30,000. Fair enough. But long term, wouldn't really want to see this break, and I'd want to see Bitcoin go sideways above 30,000 bucks for basically all of summer, for what it's worth, into like probably August at the very least. So that would be a very, very boring time, and that would be a good time. Now, there's also another contingency on top of that as well. I know that a lot of people are going to call this the head and shoulders here. Technically speaking, your right shoulder is starting to get a little bit questionable, and I would say within the next 2 weeks, this will no longer be a topic of consideration. However, there is a very interesting thing about head and shoulders that I'll offer up on the other side. That's just as useful and probably even more powerful to know, because everyone knows that you just play below the neckline and then you got your measure move, blah 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 blah. Great. If you actually do want to play a head and shoulders failure, there is a way to do it, and this is probably the most important thing that I'll say in this video right here. That's 40 fucking minutes long. When you have a left shoulder like this, and you can see a clear and obvious range. In fact, let's just use this chart right here. So what I'll do is I will get some nice little blue boxes. There we go. You have a very obvious range, right? There would be your shoulder line. Here's your somewhat like neckline right here, right? Anyways, we would imply a failure, just even by like drifting on a little bit longer for here. But if Bitcoin were to, let's say, base a little bit longer over here and then pop back above and take out the current, what would have been the right shoulder, which I think is already rather questionable, we can actually make a measure move on this. And we can make a very interesting measure move as well. I'm going to take a little bit more of a conservative one here because I think it's warranted in this case. And that actually would suggest new all-time highs at 72,000 bucks. Interesting. Very interesting. Anyways, I think that's a good place for me to leave off in this video. It's already way too long. So with that said, this is one of the videos that I'm actually rather proud of. So if you do feel compelled to like and share it, that would actually be massively appreciated. I almost never ask for that because, I mean, realistically, I produce these videos every day, but I want this video to kind of be a bit more of a standalone, and hopefully this can be of some value, of some use to people out there to make a more educated decision on their cryptocurrency, highly esteemed investments. With that said, I want to wish you the best, and until next time, take care.